March 19th, year 2024. This is Mijanur Rahman. So this video deals with the T1 tax preparation for individuals who is operating their business under self-employment structure and not under the professional corporation or regular corporation. Actually designed for lawyers, paralegals, real estate agents, or brokers, engineers and IT consultants, doctors and dentists, also other professional business as well. We'll get to that. Keep in mind that the professionals' tax returns would be different if they were professionally incorporated. Then I would require to file a T2 return for the corporation and also a T1 return for personal side for the business owner. For this illustration, I assume these individuals, the lawyers, paralegals, real estate agents, the mentioned above here on the screen you can see, are self-employed and their business structure is under the self-employment structure proprietorship. I request that you see the next video with respect to the T2 tax return. This is a scenario for an individual. His name is Mr. Raj Ali. He is a self-employed lawyer. He is concerned with his personal taxes and business taxes. He started his business by taking a personal loan of $30,000 and from his savings another $30,000. His total investment in the business was $60,000. Let's assume that he started the business in 2023. He also uses part of his condominium apartment for business purpose, and furthermore, he has part-time employment income of $48,000. He incurred medical expenses, $81,000, and he made RSP contribution, $30,780. This is, remember I said, Mr. Raj Ali, he is also an employee with ABC Law Professional Corporation. You can see it there on the screen. And also he has his own business, which is called Raj Ali Legal Services. So now this pay stub is from his employer, where he's employed under the salary structure. So he receives monthly $4,000. This is his is for CPP and EI contributions, and so the reason I'm showing you this, it will require later on. So this is his self-employment revenue and expenses from his legal professions where he's self-employed. So meaning is that this form, what you see on the screen is designed for, not designed for, but It is for his T2125 self-employment reporting purpose. Usually, when I meet a self-employment or any business, I gather data first. And then I categorize those data. So as you can see in column 1, actually column 2, where it says data gathering, I gathered those information. Then I decided what would be his deductible expenses. And then on the third column I have his revenue, 300,000. Now highlighted in red, the cells are highlighted in red, is extremely important. It can trigger a flag on your account and give rise to audits. Meal expenses, meal and entertainment. $10,000. We cannot claim the entire $10,000 as a deductible expenses because when he entertained the client, he also consumed portion of the meal. However, if he can prove that he didn't, then he can claim the entire 10,000. But it is very slippery slope. It is very CRM may want to see. They might want to ask questions. So if he did use the meal and entertainment only for the client, then he can claim the 10,000. Otherwise, it's 5,000. Always 50% rules for this particular business. He also has bad debt expense. Now I'm going to move on to, I'm going to move to sell interest expenses, which is 2,100. I highlighted that in red because he needs a structure to the loan. The lending has to be properly structured. If it is not properly structured, so if the lending is not properly structured, he won't be able to claim that interest expense. Then we have professional fees, legal accounting fees. Sometimes, if the legal fees are higher, in a higher threshold, there's a number for it. And if it is more than 5,000, I believe the number is 5,000, then he would require to use it as a, he would require to take as a, amortize it or claim it over 5 years. So in this case, it's 2,100, so we don't need to. And then it is 2,000, so we don't need to. And then the salary and wages, this amount includes the employee's CPP. This is not for him. He has an assistant. So this amount includes the employer portion of CPP and EI. And then we have the home. Again, this section over here, the light green, is the purely business expense from his business location. This is from his primary or main office. Then he has a home office where he incurred these expenses. And these expenses is, if you see the home, internet, and phone, he didn't meet the criteria to write that off, but it can be written off if he did meet the criteria. But in this case, he didn't. And you can see that there's an adjustments. I had to make that as adjustments because I'll tell you the running home expenses sometimes it's actually a little tricky. So you got to be very careful in a conservative side. I'm going to show you that later on. So as you can see here, um, as per my calculation, it is 3820. Um, oops. As per my calculation, it is $3,820 less $160. I'm going to show that to you on an Excel sheet in about a few minutes. The profile has the 3820. This number could, this can differ a bit, maybe by 5 to 10%, or probably 5%. It's not a big issue, but you get to be very conservative when you actually claim the home office expenses. So his revenue is 300,000, and his business expenses is the actual business expenses from his office is $126,876.32. If we add this column, the deductible expenses, it would sum up to $130,696. And his business income would be, for tax purpose, would be $169,304. So our concerns for this tax purpose is his employment income. Remember, this is his salaried earnings from his employer. This amount, $169,304, $169,304, we just calculated previously on the previous screen. And then his net income for tax purpose, if we add these two, that gives us $217,304. His tax balance that is due is $50,967. A reasonable person, they might have a legitimate expectation to reduce their tax payable as less as possible. Now the question is it possible to reduce the tax payable to zero? This is often asked, but keep in mind, we live in a society where the tax system is a distributive law. What I mean by that is that the government collects taxes and uses this tax money to develop the country, to provide various social benefits, and it is redistributed to the society to bring how do I say this, to well, the tax revenue is redistributed to the society back again, either way of development of the country or to the social benefits, just like tax credits or the social welfare benefits and many other things. So that's why we need to be very careful when we prepare taxes. We want to make sure that we follow rules and the tax laws. Mr. Raj, he needs a plan. He needs a financial plan to reduce his risks, and that includes financial risks and business liabilities. Raj needs legal plan to protect his business and himself. Raj can further reduce his tax expenses or tax payable by performing a financial plan, financial planning, tax planning, and legal planning. He can further reduce his tax payable. This is my contact information. You can contact me for any of the service that you require. There's also a notice for you. This is only for educational or sample demonstration. For your specific situation, please contact me or other professionals for legal, accounting, and investment advice. Do not use this as and then maybe I should say it in a different way. This is only for educational purpose. Don't solely rely on this. You need legal advice. So if you make a mistake performing your investments, tax, or legal planning, then I won't be held responsible for it, because you still need professionals to guide you through or properly file your tax return. So this is the Excel sheet that that you can see. I prepared it, and there's a point that I want to make. If you use your home office as a secondary location, then you would qualify for this. And if you use this for your main primary location and you work 50% or more from your home, then you can claim this. So the requirement, if you don't have other offices, then you would need to use this scenario. If you have main primary office, your business location, then you go by this. Okay, I'll upload this for you as a link on the video, so you can take a look at it. And this video is copyright protected, so I own the copyright of all contents in this video. Now, I'm going to enter this information into a tax software so you can see. So you can see that how a self-employment tax structure, a self-employment T1 tax return is prepared. So let's go to our profile software. There are many other softwares you could use. There are UFile, there are CanTax, Tax Prep. So you could use any of those software that you that you are comfortable with. So this is our information sheet. And by the way, the reason you need a professional to help you with this, because the self-employment and business return for corporations return or professional corporation that returns often can be problematic, and it requires legal education, requires accounting education, requires financial planning education. I personally I have a post-graduation in paralegal. I have advanced accounting certification, and the program is CP accredited. And I also have advanced financial planning. I also have my FP1 CFP from FP Canada. Some of those licenses I need to renew. Anyway, so now I'm eligible to offer you, not offer you, but I'm eligible to talk about any of those any subject within these three areas: accounting, financial planning, and legal. So, Mr. Rajali, I filled out this information earlier, and make sure that you have this information prepared correctly. This is his information, and there are some information about me as well here, the preparer. Okay, and now I want to show you this. Remember, he had concerns. He had two concerns: his personal taxes from his personal personal side, where he's employed, and right there, where he's employed, and his personal tax credits, and his business where he's self-employed. Okay, so we need to address these two separately. So once we are done with the information sheet, I mentioned Mr. Raj Ali is single, and let's go to let's take a look at his T4. Okay, so let's bring this up, the T4. You can see that I entered this information here, and this is his employment income. And we had to, once this is filled out, this is his CPP contribution, this is his EI premium, and this is his, this is actually made by his employer, ABC Law Professional Corporation. This is his employer. So this is his employment earnings from his salaried job. Then we go to his, now in this case, he owns a house, and I didn't bring up the house information, but I'm going to show you this here. He can claim Ontario Trillium benefits. So you could just simply take this box off and fill out this information over here because he paid property taxes. So there isn't much about his personal. Or one more thing he has is that this is also, you need to also fill out the carbon rebate, previously known as climate incentive. So once you provide your information, you'd have to check these boxes here, okay? And we also have his medical information. He had some medical expenses. Now I want you to take a look at that. There's the 3% rule right here, okay? So he incurred $8,100 as a medical expense, and this amount he had to subtract. This is actually a deductible for medical expense purpose. And what I mean by that, this amount is excluded. So his allowable medical expense is $5,465. Okay, and his RSP contribution is, he contributed $30,780 towards his RSP. You have to make sure that you fill out this RSP contribution correctly and the medical expense correctly. You have to make sure that you fill this information correctly and precisely. Okay, so this is pretty much it for his personal side. Now let's go to his self-employment business side, where we would be addressing this, where my cursor is, you can see T2125. Now, in this video, I'm not going to show you what to do with if you had any assets under that is used by the proprietorship business. Now let's click on the T2125, and you can see the first thing I want you to know. Sometimes lawyers or accountants or professionals, they apply for trade name, and in this case his trade name is Rajali Legal Services, and you would have a GST number. In this case, he would require a GST number by law, because his business income is more than 30,000. This number could change. I have to take a look at it. What is the number for 2024? So his main product of the services is legal services. So if you go over here and if you press function F4, then you could type in law, and it would show the function F6. I apologize. Now, if you type in law here, you could choose Office of the Lawyers or any of those things, or you could type in legal services. So you could choose these as well, other legal services if you're paralegal or something else. Okay. And he owns 100% of this business, and I am the one who is preparing his taxes. So my information is here. And if you had any internet activities, any internet business, like let's say he offers consulting or some other products through his professional website, then he would type that in and then put the percentage of the revenue here. Now remember, I said that the self-employment for the professional and ordinary individuals who has other services, like maybe own a convenience store, maybe owns retail shops, they would, or probably has commission income, they would fill out this section over here, part 3A, and for commission income, you check this, or business income, you check this, or this. So I'm going to have to uncheck this. I guess I can't uncheck, but anyway, so let's move to this. In this case, the client is a lawyer and he has professional income. So we fill out this $300,000 here, the revenue, and then if we had any cost of goods sold, then we would put this here. But he's a professional, so he has no cost of goods sold, the CGS, cost of goods sold. Okay, so we're going to move straight to the expenses. Now here, the software shows that the gross income before any other adjustments is 300,000 right here. But the software shows net income, so which is fine. But anyway, so remember I said he has the lawyers, professionals, the paralegals, accountants, they trigger advertising expenses. This is where the 5,000 comes from. This is the meal expenses right here. You can see 10,000. We took 50%, that is 5,000. He has bad debt expense. So I'm not going to get into all this detail. You just simply fill this out. And then what I want to talk to you about is that now remember, his rent is very low, 24,000. his list probably excludes the utilities like heating, HVAC, let's put it this way, fuels. So if we fill this out here, over here, these utilities could be his telephone and other utilities. So once with that we fill that out, it provides us on line 9220, the $11,000 expenses. What I want to talk to you about is that his motor vehicle expenses. This is very important. So we can add, as he might have 3-4 vehicles, but in this case he only have one. So simply fill out the HST and this, fuel and gas and maintenance and licensing registrations, all the other stuff, right? And if you see here is that here you can see that the total kilometers driven is 40,000. The total kilometers driven is 50,000. To earn the business, he drove 40,000. The total kilometers is 50,000. So he had this vehicle leased. He didn't buy the vehicle. He leased it for 1 year. He leased a BMW for 1 year, and he drove 50,000 kilometers, 10,000 for personal, and 40,000 for his business. As you can see, the business uses 80%. The software probably automatically calculated the cost for the $10,000. We'll take a look at the T1 later on. I'll remind me if I don't forget. I'll show that to you there. So this is how the fuel maintenance leasing. Oh, by the way, I wanted to show you this. Is that the capital cost? If you bought this vehicle, the vehicle cost is $50,000. If you had to buy this vehicle, then we would go to capital cost allowances. We would fill out the date of acquisition, then the vehicle make, model, the UCC. Since it's a new, then we don't have any beginning UCC balance, and then the GST rebates. Some vehicle they come with GST rebates. I have to take a look at it if there's any GST rebates for every vehicle or just a specific model. This changes year by year, so you'd have to look into it. And then if you had more vehicles, let's say if you added a few more in the same class, then you could pool some of those assets. You'd also have to look at it whether you could pool this asset class. Okay, so this is something that gets more complicated. If you had more vehicle, if it comes in, goes out, this makes it really difficult. That's why if it's a simple tax return, then it's no problem. But it's a complex tax return. They have pool assets, 4 or 5 vehicles, 4 or 5 assets in the same class, and then some were sold, some triggered the recapture, or some triggered the terminal loss. So if they have terminal loss, some may trigger recapture. So it's very detailed, lengthy calculation you'd have to go through. So it's very important that if you have many vehicles, if it's a simple business, one vehicle, everything, single, then it's no problem. But the more complex it gets, if you had capital loss, investment income, business loss, I didn't show this here because this would get really complex. So I want to keep it as simple as possible. It's very simple, but it might be difficult for some of you if you are not an accountant or financial planner. Even sometimes it's difficult for them as well. So you'd fill out this information. Okay. By the way, if your vehicle costs more than $30,000, this may have changed. I'd have to take a look at it. And then the asset class would be 10.1 for the, and if it is a truck, there's a different class, I believe. You'd have to take a look at the classes for the CCA purpose. So in this case, the client, he wants to lease the vehicle, okay, because he's not, he wants the peace of mind as the benefits over the, if he had the CCA, if he bought the vehicle, then he would have asset, liabilities, and expenses. Since he owned the vehicle, not since he leased the vehicle, then he has expenses, and he might have to provide a non-disclosure for the liability from the 1-year lease. Probably not, it's short term. So if it is more than 1 year, then he would require to provide disclosure on his financial statements that he has a lease liabilities. And some cases he may have to recognize those liabilities as an actual number. So as you can see, this is his total expenses from the primary business locations, not from home expenses. $126,876.41. You could find those items over here if you had to put side by side. You could see which line you can put into. Now, remember I talked about these terminal losses. This is terminal losses here, okay? And if you had recaptured, then it would go to the income side. That would be under other income. They would have to put it in, okay? So with respect to his home office, remember what I said earlier is that there might be sometimes you might have a bit of when you gather data and when you manually prepare information, you might be off by certain amount. In this case, I had a different calculation, a different amount, which is the I'll show that in a second. I had 3,980 cents. This is the cell right here, and let's see how much is it. What is the difference? It's about 4% difference, so it's no big deal. The software calculated differently. Alternatively, you can also, if you need to be conservative, you can also use this number instead of this. So if you need to be very, very conservative to make sure that you are audit proof, right? Make sure that you have no issues. So you could use this as an expense over here. What would you do? You'd go to profile and you would override a line. So in this case, it would be summation of these items over here. So you'd go to the profile and you would correct this item over here, 2068, and that would change. You can see the amount changes, the refund, the balance tax due amount changed, and also you see it changed over here as well. You'd have to sign off here, okay? So the preparer sign off. You have to sign up this over here, okay? But I'm going to override this. What I mean by that, I'm going to put back the what the profile calculated, which is the 3820. Okay. Oops. So I put back the 3820. Okay. So this way, you can follow along. Is there anything else I'm missing here? No, that's it. So this is the number that you need, $169,303.59. So when I showed it on the Excel sheet, I round this off, $169,304. I used as integers the entire Excel sheets. I'll upload that on my draw. Actually, I have it uploaded. I'll have to just I don't know, I have to take a look at it. But anyway, so I'll upload a link for you so you could take a look at it there and see if you can understand it. I also wanted to bring this to your attention before I move to the next step, is that the T1. Okay, so this is what the T1 would look like. Okay, you'd go through this and you'd have all this document prepared. And this is one of these important lines, line 15,217,303.59. This is actually his net income for tax purpose. So now this is, remember what I said is that this includes his employment income, this 48,000, and this amount, which is the business income, is from his self-employment income right there. You can see there, right? So it shows their gross professional income 300,000, and then the expenses is $169,303.59. If you add this to 58,169, this is the main concern. This is his earnings, okay? And then later on, and it shows on the line 15,000. Furthermore, I was looking for this line over here, these RRSP deductions. It is very important that high net worth individuals contribute to RRSP, or someone who has higher income. Maybe that's the right word, higher income. And so this is the T1. This is what it looks like. Okay, and if he owes any, you can see it right there. And this is his total payable amount. Oops, that's not it. This is the one. Line 48,500. This is his tax balance owing to CRA. He has to pay this amount. Okay, and before I get to the other stuff, I also want to show you the T183. You need to have this signed by the client, and every document would have the document control number, and then you would have your e-file number, in this case you can see my e-file number and the representative ID number. So you'd have that. So you'd have those, your e-file, your representative, your group, the identifier with the CRA. So this allows you to e-file and access, as autofill certain information. Let's say the client has unused RSP, unused tax credits that can be carried forward, like medical expenses, tuition expenses that are unused. Those are the things that you need this rep ID and the electronic filer number to e-file and submit this return. But if you don't, if you do not need this, if you are filing it manually, make sure that you check these boxes. Make sure that you you correctly have the client sign this. I usually have the client sign the declaration forms so that the information they provide is precise and as much accurate as possible. Okay, and let's before I get to the T1, let me show you something. So this is the Income Tax Act. It's still loading. You can see it right there. So you could go to Justice Canada, their website, and get information about tax law. And you can also click on the table of contents. This is the criminal code. You could get this information. Now, I wanted to make sure that when you prepare the taxes, when you perform your financial planning, tax planning, and legal planning, you need to, I always look into the tax law, tax interpretation, criminal code to make sure that the tax preparation is accurate and precise. I try, and again, you want to be as precise as possible with respect to tax preparation, and you need to be when you prepare those taxes or financial planning, tax planning, and legal planning, you need to be not only letter of the law. You have to follow the spirit of the law. You have to make sure that you are ethical and legal as well in every aspect. Okay, keeping business legal is very important and ethical. So this is the Criminal Code of Canada. You could go through this. It's pretty long. Sometimes takes a long time to load it, depending on depending on the speed of your internet, or sometimes it takes a long time to load it. Okay, so maybe a minute or two, some cases. And being a paralegal, it allows me to I can search case laws where there's a dispute. I can look at the specific law, regulations, and interpretations. So I'm allowed to, I can speak in any of those three areas: advanced accounting, the paralegal, and financial planning. So if you have any questions, concerns, you can always reach out to me if you want to retain me for any purpose. Once again, if there is something that came out as a bragging, please excuse me. Right there, the letter that I sent out to the client, it tells him that he had to make installment payments. These installment payments are required, and if he doesn't make the payment on time, then you probably pay an interest or penalty, depending on his situation. If you're going to be late, make an arrangement with CRA. Furthermore, to these installments, you have a deadline, June 15th, year 2024, for the tax filing for the year 2023. So make sure that you file your tax return by the June 15th, year 2024. My contact information is shown on the screen.